Vincenzo's Go Crypto Investing this November the 10th, 2025. Cryptocurrency and blockchain technology update. And the key questions that you're asking and need to know the answers to is this most recent turnaround over the week on the end and the bottom in the altcoins, the bottom in Bitcoin at 99,000, the bottom in Ethereum when it bounced off of the bottom part of the screen support and resistance box at 3,063 cents, or is this a trap being laid as the much bigger play that's the much bigger pattern and the much bigger objective is still out there, which is coming down to these wick lows across the board from 4.5 Fridays ago? These questions will all be answered if alt season 3.0 has started, if the bottom is in, and if the turnaround and the continuation of this euphoric bull run continues, or is this just another stop, another fleece, another heist, and another chance for the criminal gangsters to get a little more liquidity and get some of that pull before it flushes and grabs the big liquidity pull all the way down near these wick lows from a few Fridays ago. These will all be answered as this video goes on. As another question we'll get into is why are these Satoshi era holders from 2008 to 2011 unloading massive amounts of their holdings from back then? Is that because they know there's a big crash? The crash to end all crash is coming. They're finally hatching their chickens and reaping the rewards and walking away with the money. And who are they selling to is an even bigger question you should be asking yourself. If these people are unloading and selling, who are they selling to? They were the first movers. They got in on the ground floor. They were early. The people now are not early. The people buying today are late. The people buying today are buying from them, in my opinion. They were the ones that were early. They were the ones that saw the trend. They were the ones that made 1,000x, 10,000x, million X returns, right? They were buying at $1, mining them at 50 cents. That was the real, true first mover advantage. But let's get on into the Bitcoin price. You can see the Bitcoin price has come up, and what I think we're in here with the Bitcoin price is a technical bounce off a technical level, going into a major overhead resistance with the daily time frame moving averages, also a major liquidity pull, and we still have not. And I repeat, we still have not hit the 95,662 and change, and that is the going call right now. This to me was just a technical bounce up to overhead moving averages, and these moving averages are falling. We've had a freshly minted bearish cross where the 50 in the daily got below the 100 in blue right there. You can see it where it's just on top of it. And I still believe we're going to have a golden bears cross where you're going to get the 50 below the 200-day moving average, I believe sometime this week. And I think, and my forecast is still, I told you when we talked about and warned about to give you that education, the knowledge, and the insight that you need to become an asset millionaire, that on a technical rally, you could expect a brief bounce all the way up into these descending moving averages. And that would be the critical time. If you jump up above them and you hold it, that's very bullish. Then, and only then, can you come up and try to retest the pattern's resistance now, the 3.5-year rising channel, which is sitting up there at today's price, probably flirting and would be a new all-time high at about 128,000 because it is steeply uptrending now. But I think you're going to get rejected by these descending moving averages. And I think this is classic hook nose bearish reversal. And you're coming down to this 95,000 and take that to the bank. That's the call. That's what you need to know on this early Monday morning after a very snowy, snowy Sunday and Sunday evening in the greater Roseville metropolitan area. And that's why the videos were not existent this weekend, because I was covering our first winter storm of the season in the great state of Michigan. And Michigan snow forecast gold standard racked up 3.4, you heard that correctly, 3.4 million views in the last 28 days. The last 7 days, 2.3 million views covering that storm. And in the last 14 days, 2.8 million views. You heard that right, 2.8 million views. So I was very busy. As you can see, we are approaching 12,400, so 12,500. We're on our road to 25,000, and we're going to eventually hit our next major goal of 100,000 on here. And you can see we were doing nonstop posting, keeping everybody obliged. And you can see here's a picture from Roseville at my house. That's not from yesterday. That'd have been nice if it was, but you can see what we dealt with yesterday with the snow in the greater Roseville metropolitan area under a very intense, very heavy lake effect snow band. You can see it was very beautiful. So we were covering Arctic air, lake effect snow, and system snow. We got about 3.25 inches in Roseville, making for a very wintry scene. So that's why we were not able to do video updates all week. I like this shot. Look at that. The snow on the patio. But that's why the updates weren't coming. If you're on Facebook or you're into weather, join Michigan Snow Forecast Gold Standard. But that's what we were doing all weekend. What's the time check? All right, we're good. If we move along to the Ethereum price, you can see Ethereum had a much bigger rally than everybody else, but it had a much bigger fall than the Bitcoin price. You can see we bounced up to 3,068 on the wick. A 3-day wick down right there where the first wick actually hit it. See that? And then the other two were slowly uptrending above that. We did break the 34.74, which was a major resistance level. And now what we're looking at is we're threatening to have a bearish cross. I believe we're going to have a bearish cross, but with the price action pump today, it's averted that, at least for today. What I would pay attention for now in the Ethereum price is got to get above the 200 and hold it, because if you don't, you're going to end up back on the top part of the screen support and resistance box, and it's not going to hold it. And you're going to end up on full candle bodies at 3,068 and change. If you can hold the 200-day moving average, you got a lot of room where you could run up to the 50-day and the 100-day before a possible rejection. So in the short term, that's what I'd be watching out for in the next 48 to 72 hours. If it fails to hold this 200-day and ends up back on the 3,074 and change, I don't believe you're going to hold the top part of that green support and resistance box. I believe you would fall back down to the 3,068. So that 200-day moving average right there in green is critical. Right now, we've had two wick offs and stayed below it. Currently, we're sitting just below it after breaching above it earlier this morning, and that's going to be your critical spot when you're watching the Ethereum price. You can see the XLM price. We have the 50-day moving average is descending. It's getting awfully close to the 50-day moving average in the weekly time frame, signaling a significant bear trend over the recent time. And right now you can see we had a phenomenal rally off the wick, off the 100-day moving average, and it rebounded all the way over the last several days to just below the 31 cents. And then we quickly got rejected and wicked down off of it. And now what you want to see, if you're trying to get bullish, let's extend this box. We must unlock it first, as the future has become the present and the recent past. Just now, uh, good. So what you want to do if you want to get bullish, and we're going to move this over, is first off, you need to get above this 50-day moving average and this green resistance box that are lined up exactly together now. And then you need to try to take out these overhead moving averages. But at first, you have to get above the 50 at 31 cents. As long as you're below the 50, you're threatening to come back down here. And again, if you come back down to the 100-day in the daily or the weekly time frame moving average there, you're not going to hold that. You could trade up like this, but you would not hold that. You would quickly fall down to the green left to right horizontal line, which is, yes, you guessed that correctly, 200-day moving average in the weekly time frame, right? So it's very simple to understand there. If you want to avert that and you're trying to get more bullish, obviously you got to get above the 50-day right here and then start to work on top of these daily time frame moving averages. And eventually, you got to get all the way up here and then hold that. You have a lot of work to do on the overhead, something you haven't been able to do in August, September, October, and November. It's been consistently down with relief rallies. So we're going to see if we can break the trend or the trend continues. The XLM is the same thing. We bounced off its 100-day moving average in the weekly time frame at 25 cents, and we came just below the 50-day moving average and got rejected. And it's the same thing here. If you're trying to get short-term bullish, you got to get on top of this 50-day in the weekly and get on top of all of these overhead moving averages, right? Because these are all major resistance levels. uh I don't remember if I just did this or I did XRP. If I just did this, my mistake. If I just did XRP, it's been a long day. But you got to get above the 50-day moving average. If you don't, you're going to end up potentially all the way down here to the 21 cents, right? If you get rejected by this 50, because if you come back to the 100-day moving average right here, you won't hold and you're going to come all the way down there, which would be the 20-cent level, right? So it's very, 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 very brutal there if that happens. And not a lot of people are expecting that still. And I'm still warning and trying to give you guys the information